Okay, Ghana, let's talk about your money, the Cedi. For a while there, things looked a bit wobbly. But hold on to your hats, folks, because something amazing is happening. The Ghanaian Cedi is making a comeback. A serious comeback. As of May 22, 2025, it appreciated by a whopping 24.1% against the US dollar. Yes, you heard that right. 24.1%. That's like your tired old car suddenly winning a drag race against a much bigger car. It's impressive stuff. Now, why should you care? Currency fluctuations, you might say, sound boring, and yes, usually they are. Terribly boring. But this isn't just numbers on a screen. This is real life. A stronger Cedi means imported goods could get cheaper. Think fuel for your trotro. Think rice. Think medicine. It means your hard-earned money might actually buy more stuff. This isn't just economic jargon. It's a potential sigh of relief. A very big, economy-wide sigh of relief, in fact. And this isn't just a fling with the US dollar. Oh no. The Cedi is playing the field and winning. It's gained strength against other major international currencies too. We're talking the euro, we're talking the British pound. It's like the Cedi went to the gym, got a new haircut, and is now flexing. This broad-based appreciation is a very good sign indeed. It shows a fundamental shift, not just a lucky break. It's a sign of growing strength from within the Ghanaian economy. This turnaround is doing wonders for something called public confidence. Basically, people are starting to believe in the economy again. And that belief, that confidence, is incredibly powerful. It encourages investment, it encourages spending, it encourages stability. When people feel good about the future, good things tend to happen. This restored confidence is a crucial ingredient for sustained recovery. So the Cedi isn't just a currency, it's a mood ring for the nation. And right now that mood ring is looking pretty bright, folks. So, how did this magic happen? Was it a wizard? A secret potion? No, it was largely the Bank of Ghana, your central bank. And they've been busy. Very busy. One of their star moves? The Gold for Reserves program. Instead of just borrowing foreign cash, they started buying Ghanaian gold. Locally mined gold straight into the vaults to build up reserves. By early 2025, they had over 30 tons of the shiny stuff. That's right, actual gold. Like a dragon's hoard, but for economic stability. Then there are the market interventions. Sounds technical, right? It basically means the Bank of Ghana stepped in when things got wild. In April 2025, for example, they injected about $490 million. This was pumped into the foreign exchange market. Why? To provide liquidity, to calm things down, and crucially, to reduce speculative demand for the dollar. Think of it as a firefighter hosing down a dangerously overheating market. It's a direct, hands-on approach to managing the currency. And let's not forget monetary policy. The Bank of Ghana kept interest rates high. The main policy rate, a hefty 28%. Now that might sound like a lot, and it is. But high interest rates attract investors looking for good returns. They also help to put the brakes on inflation, which is key. It's a bit like strong medicine, not always pleasant but necessary. The bank even raised the rate by 100 basis points in March 2025. This was a clear signal. They are serious about anchoring inflation. The Bank of Ghana didn't stop there. Oh no. They also tightened regulatory oversight in the forex market. Basically, more rules and closer watching to stop any funny business. And they revised the cash reserve ratio for banks. Now, banks have to keep reserves in the same currency as their deposits. Foreign currency for foreign deposits, local for local. Simple but smart. All these actions combined create a much stronger financial defense. It's a multi-pronged strategy, and it seems to be working. Now, the Bank of Ghana wasn't acting alone. The government played its part. The current NDC administration has focused on fiscal discipline. That means being careful with government spending. Very careful. They've implemented strict fiscal controls, sticking to an IMF agreement. This includes better budget management, which is always a good idea, plus a freeze on non-essential spending. Sorry, no gold-plated staplers. And importantly, increased transparency in how money is managed. This discipline is like a strict diet for the national budget. Then came the tax reforms. And this is interesting. The new NDC administration actually removed some unpopular taxes. Remember the e-levy? Gone. The betting tax? Axed. The COVID-19 levy? Also shown the door. This wasn't just about making people happy, though it likely did. It was about reducing the tax burden on citizens and businesses. The idea is that this helps restore economic confidence further, and lets people keep more of their own money to spend or invest. Another smart move, Ghana got its own commercial gold refinery. This was completed back in August 2024. Why is this a big deal? Well, previously Ghana mined gold, but then it often had to send it elsewhere to be refined. Now Ghana can process its gold locally. Add value right there. This means more money from gold exports, and less reliance on others. It's about taking control of a key national resource, and turning raw materials into more valuable products. And let's not forget international support, friends in high places. The previous NPP administration negotiated a crucial $3 billion deal with the IMF in 2023. This extended credit facility came with conditions, of course. Fiscal controls and reforms were part of the package. But this deal laid vital groundwork for the stability we see now. The World Bank also chipped in with grants and concessional loans. This money targets key sectors like education, health, and digital infrastructure. And importantly, it adds to Ghana's foreign currency reserves. It's not just what Ghana did internally. The world outside also played a part. Think of it like sailing. You need a good boat and skilled crew, yes. But sometimes the wind and tides are in your favor too. One such factor? The ongoing US-China trade war. Those big global tensions have ironically weakened the US dollar a bit. When the dollar isn't as strong globally, it gives other currencies room. Emerging market currencies like our friend the Cedi can gain value. So, global squabbles can sometimes have surprising local benefits. Then there's the glittery allure of gold. And cocoa. The price of gold has been on a tear, reaching over $3,400 per ounce. For a gold-producing nation like Ghana, that's fantastic news. More dollars for every ounce exported. Big cha-ching. Cocoa prices have also been strong, adding another stream of foreign income. This boosts Ghana's export earnings significantly, and it improves something called the balance of payments. Essentially, more money flowing into the country than out. So, what's the impact on the ground? Well, it's a bit mixed for now. The Cedi is stronger, yes. But prices in the markets haven't dropped much yet. The Bank of Ghana's governor urged patience. It takes time. Competition among traders should eventually force prices down. Hopefully. There are still challenges, of course. Food supply issues, for one. And the ever-present risk of external price shocks from volatile global markets. Plus, geopolitical tensions are always a wild card in the global economy. But the outlook? It's cautiously optimistic. Very cautiously optimistic. The Bank of Ghana is targeting inflation at 12% for the end of 2025. They even hope to hit single-digit inflation by early 2026. Ambitious. Ghana's international reserves are looking healthy too. At the end of April 2025, they stood at $10.6 billion. That's enough to cover about 4.7 months of imports. Solid. So, while the journey isn't over, the Cedi's comeback is a massive step. A step towards a more stable and prosperous Ghana. Keep it up!